Let's come back. Now we have a summary on using periodic returns to do the comparison for the dynamics of two stocks. First, we need two stocks, such as Jingdong versus Alibaba. And then we need one measurement. Usually, in order for us to see clearly the long-run trend, we usually use annual return. In this way, we need to understand the relationship between the trend and the period we use to calculate return. The longer the period is, the more useful information we can get. However, the longer the period is, the more detail we will lose. The cost of getting more useful information is we lose too much details about the stock return. So we have to balance the length of the period versus the useful information we expect to get. So we have to balance on this. Next, let's do a case studies together, still for Jingdong and Alibaba. We compare their trend of performance, the different features of their return trends. We will use annual return, but this time we still use the starting points 2020 January the 1st, but this time we expect to extend the date to 2022 July the 12th. Okay, let's do it together. Now this command. (2022) July 12th. In this way, we can have the recent information about the trend of returns between Jingdong and Alibaba. We can see the dynamics of their return. Okay, the internet crawler has fetched 1,134 records for Jingdong, the same amount of records for Alibaba. Now I guess it is drawing the picture. Okay, we have the picture now. This is pretty interesting, and it reviews different situations with the pictures we have seen just now. I'll try to call someone and try to explain. Okay, so let me call Li Lusa. Lusa, are you there?
Hey, Professor. Good morning.
Lusa, are you waiting to say something about this picture?
Okay. Jingdong and Alibaba have the same trend.
Similar trend.
Similar trend.
Yes, first point, similar trends. It's very important point. Why are their trends similar to each other?
Because they are in the same e-commerce industry.
Yes, because they are in the same industry, e-commerce platform. And this trend not only represents the situation of these two companies, but actually the whole industry, right?
Right.
What about the second point?
Jingdong's annual
return. Yes.
Is higher than Alibaba.
Yes. That is another very useful information. It's higher, to our surprise. Usually I think Alibaba is a better company. This is my personal perspective. But the hard data give me a surprise. Are there any third points?
The trend both go downward, upward, and then downward.
Okay. The first is downward, then upward. Now we have a ceiling period here is around October 2020, right? Then
Yes.
goes down and down and down and down. But we are not sure if here is the floor, we're not sure. If it is a floor, it's time for us to buy in, right? But we are not sure about that. Probably it's a regional adjustment. So our advice to investors is to be very careful, because our predictions to the economic situations is still uncertainty. It's highly uncertainty globally. The global economy is now suffering from high inflations, great strong signals for downward economic situations. And we are also suffering from COVID-19 pandemic diseases and its new variants. Also, many unfavorable factors. So our advice here would be careful, very careful to our investors, right? That's the trend. Any other additional informations you can read from this figure?
Alibaba's annual return goes beyond zero around 2021 July.
Yeah.
And Jingdong 2021 October.
Yes, now they are all below zero. Okay, in terms of investment analysis, the zero return is a very critical line. It's a very critical line, right?
Yeah.
Okay, so now below zero. We have another information, another useful information in this graph. Can you find out? Okay, now let's look at the spread. Okay, the spread at the beginning is very small, and then getting bigger and bigger and bigger. Okay, then small, steady now. So this means the business situations or the business operations or the business performance between these two companies, looking at their differences. Now it's steady, right? It's steady. This information also helps us to determine the stage of the development of this industry, the stage of the industry development. If you learn company strategy in the future, similar courses, you can find out a company usually experiences several typical stages. First stage, grow up. Next stage, fast grow up. Okay, let me use another. These are the typical stage of company development. You may learn that in other courses in the future. Okay, we call start up. Then fast growing. Then it will be a stage, we call them a platform or the ceiling. And this stage could maintain a long term, probably a long term, couple of years, even tens of years. So it is weak in growing, but it has strong capability to be a cash cow. Then going down, probably going up if they have a smart leader or a strong leader, but we don't know. But usually these are the typical stage. Okay, the two top gun company in e-commerce industry in China, Jingdong, Alibaba, the spread of their periodic return remains steady. Means what? At least from one perspective, we can guess that this industry now is roughly at this stage, unless we can find out new drivers to promote the industry again. So what are the new drivers in the e-commerce industry right now? From my personal perspective, we can find two new business models. I have observed two new business models from my personal perspective. One is called Pinduoduo. Okay, it's actually a group business. It's a further development of group purchase. Another one is called independent shop model. The representative is a new website called Shopify. Shopify in US. Now it's growing very fast, very fast. It's a whole new business model, very different from the business model of Amazon and Jingdong and Alibaba and Pinduoduo. So one is called new business models. We already have. This is a pretty new drivers to this industry. Also, we need another drivers for the industry is, I think, is the demonstration of goods in website. We need a new demonstration technology, especially the 3D images. Now, the pictures of goods in website are all two-dimensional images. It is not very favorable for investors to buy something such as shoes and clothes. We have been very puzzled about the size of shoes and clothes and something similar when we do an internet purchase. I believe that 3D images technology would be very helpful in resolving such kind of puzzles. So in this way, in order to make the industry to fast growing again, we need new drivers. Of course, this is not our focus. This will be a focus, another course. So this is from the spread, the changes of spread. We can guess something. And the changes of spread may not be a strong evidence to demonstrate the changes of the performance of these two companies, but it's an indicator. Now, let's get back to the slides. And we do another exercise. Let me do the exercise and show you, and then I'll call another person trying to explain the results of the picture. This time we compare Apple versus Microsoft by using periodic return and since 2020. In this way, we can analyze almost all the major stocks in the world, not only the stocks in mainland China, in Hong Kong, in Japan, Korea, United States of America, Germany, France, United Kingdom, Italy, Belgium, even Israel and Saudi Arabia. Of course, for some of the countries, if you expect to analyze the stocks there, you may have access to Yahoo Finance. Okay, this time let's compare Apple versus Microsoft. Of course, you can compare Moutai versus Wu Liangye as well. Let's see the results. Star here means the command is now being executed. When the star disappears, the execution finished. Trying to capture prices from Sina Finance and Easter Money for Apple. Retrieved 1,139 records for Apple. Searching the information in Sina Finance for Microsoft. These are the informations given by this Python command. Okay. Wow. This is pretty interesting, right? This is amazing, this graph. Very amazing. In order to analyze this, I need to find someone help to explain. What about Feng Mengchu? Mengchu, are you there?
Hello, Professor.
Yeah.
Can you hear me?
Yes. Would you please speak a bit loudly?
Okay. Well, from my perspective, I think for Microsoft, its general trend is going downward.
Microsoft, which is the orange dot line.
Yeah.
So you think first, Microsoft downward, but not that significant, right?
Yeah.
Okay, let's look at this way, right? Wow, becomes more significant starting this year, right? But actually, relatively steady, right? Compared
Yeah.
to Apple, steady. And next,
for Apple, I think it is going upward and downward very significantly.
very
Especially,
significantly, especially here, right?
yeah,
And here. Well, we believe that something happened here, right?
yes,
And something happened here, but for now we don't know. Something happens that can dramatically impact on Apple's stock price. So please
yes.
guess, what kind of events can strongly influence the stock's price?
Well, I guess maybe there are some conditions like pandemic or other factors that maybe that may affect the investors' attitude.
Yeah, but in security market, one kind of events could significantly influence a stock's price, which is called stock split. Stock split. Another similar event is stock dividend. These two types of events could both significantly change stock prices, significantly, dramatically change stock price. So let's look at here for Apple. Its stock price is nearly 150 US dollars, right? And
Yeah.
dramatically down, probably in one day, this is not stock price. This is periodic return. This is annual return, 150, dramatically down to minus 50%. And then up again. Wow,
Yeah.
that is pretty interesting. Very interesting, right?
Yes.
So I guess it would be probably there is a stock split here. Probably, I'm not sure. You can search for internet for Apple News. And here, I don't know why. So I need to find out. Okay. Any additional information you want to say?
Well, I think during the period after 2021 October,
October here, right?
yeah,
Yeah.
after maybe the stock split, the annual returns of the two company have a similar trend.
Similar trends. Okay. Similar trends after that. And one significant event for Apple's periodic return is its return back to positive, right? Back to
Yes.
positive. For investors, this is a very important signal because in this period, Apple's periodic return is negative. Negative means not worth for investment, right?
Yeah.
And it's back to positive. Okay, this is a very important alert for a stock's value proposition. It's a very strong signal. So in security analysis, we are very sensitive to signals, many kinds of signals, right? It's a good point.
Yes.
It's a very good point. Any additional things you want to say to us?
I think no more.
No more. That's good enough. Thank you very much.
Thank you, Professor.
Okay. Now let's try to find out what happens here and what happens here. So let's look at the dates. It is roughly, I think it's September, October or September, right? And here is, I think is September or October as well. Now, we suspect that there were stock splits or stock dividends. Now, let's find out. Okay, this part we will learn later, but in order to explain the very strange behavior of Apple stock, let's look at in advance. Okay, Next, let's try to analyze Apple's stock split as well as stock return. Stock split. Sorry. Split. Apple. Then we find out 2020. Probably we start to analyze from August the 1st to 2021 September. Well, it's a big month, right? Let's look at stock split first, then we look at stock dividend. Let's try. Oh, we have a problem here, right? I don't know what happens. Invalidates. Okay. For September, we don't have a 31st. Okay. It prompts invalidate 2021 September 31st. We don't have this date, so I changed to September 30th. Okay, we find out there is a stock split. On 2021 August 31st. It's a Monday. The stock split ratio is 1-4. My God, it's 1-4. 1-4 means, suppose you were an investor of Apple stock. Previously, you have 100 shares. So after the stock split, now you have, how many shares do you have? 400 shares. 400. Amazing. However, the number of shares you have significantly increased, but the stock price changed as well. And the stock return changes together with stock prices. So that's why the stock return down dramatically, because, for example, before the stock split, suppose Apple stock price, I don't remember the exact number, suppose it's $160 before stock split. After the 1-4 stock split, what do you think about the stock price of Apple? Theoretically, it should be divided by 4, right? To $40. Then, this is the changes of stock price. Based on the changes of stock price, you can look at the changes of returns. Just think about stock price. One stock price changes from $160 to $60. What do you think about the stock return? Down dramatically and negative. That's the situation here. But for the situation here, let's look at again. We don't have a stock split here. Right? Then let's check if there were a stock dividend event here. Let's check. Stock dividend. Okay, make sure the date period covers these 2 points, because we want to find out something, what happens during this period. Okay. It's pretty interesting. So let's look at here. 2021, August 8th. It's a Friday, and Apple issues dividend. 2.22 US dollars per share. Okay. It's around here. So this can roughly explain what happens during this period. Roughly explain. Probably we need more evidence, but now we already have a clue to explain what happened in these turning points. I'll explain these 2 commands later in Module 4. In Module 4, we will talk about company fundamentals. And in order to have results for these 2 commands, you have to have the internet access to Yahoo Finance, because these two commands retrieve information from Yahoo Finance. If you don't have the internet connection to Yahoo Finance, you will get no information and just have an error message. Now, we roughly have some clues on how to explain these turning points. Apparently, these are turning points in terms of periodic returns. These are turning points as well. Dramatic, significant turning points. We already have clues to explain them. This is Apple versus Microsoft. Next, let's talk about another very important concept, which is called holding period returns. Holding period returns is abbreviated as HPR. Let's look at the questions in this topic. First question, what is the holding return or holding period returns of a stock in a period? Of course, you hold a stock must be in a period. You cannot hold a stock forever, right? The second question is, how can HPR quickly find out the value propositions of different stocks? Wow, this is a very, very useful questions, very meaningful questions, very significant questions. I believe all investors are expecting the answer of these questions. In other words, this questions is roughly equivalent to the questions, is this stock valuable for me to invest? It's roughly equivalent to this question. Or, I like two stocks, Maotai and Wuliangye. Mr. Analyst or Mrs. Analyst, please tell me, which one should I invest? Is that question interesting? Very interesting. Let's find out how to answer these questions in this topic. This time, we still use two companies, Jingdong and Alibaba, because, I like these two companies personally, because I often do shopping in Jingdong, and sometimes when I cannot find out the expected goods in Jingdong, I may turn to Alibaba, Taobao, or Tianmao. And recently, I also turned to Pinduoduo as well, because for some goods, especially some low-value goods, I cannot find it out in Jingdong, so I have to buy it in Pinduoduo. We have a new topic. This is our topic case. For every topic, we usually have a couple of steps. First, we will provide a topic case. From this topic case, we will learn some of the key knowledge points. And after we have understand the knowledge points, we will do case studies, case exercises. And case exercise will help to enhance your skills just learned. This graph is amazing. It is a demonstration of Jingdong versus Amazon by a new measurement called expanded return. Expanded return is another name for holding return. Why we have another name, I'll explain later. Okay, the expanded return. Now, you think it's as a HPR. And Jingdong versus Amazon. Sorry, not Alibaba. Starting from January 2019 to the end of 2020. So this time period is 2 years. It's 2 years. Suppose one investor began to invest both on Jingdong and Amazon simultaneously. And what are the differences of the investor's investment return during these 2 years? Let me repeat the question. Suppose an investor began to invest two stocks, Jingdong and Amazon. Amazon stock code is AMZN. AMZN. Simultaneously on 2019 January, for example, January the 3rd, the first business day, and hold these two stocks until the end of 2020. For every day the investors hold these two stocks, there will be an investment return, which is actually the HPR, holding period return. So holding period return means starting from here till this date, what is the return? What is the return? Until this point, starting from here, what is the return? During these 2 years, what is the changes of the trend of the holding return? This is a very important question to every investor, right? So that's why it is so important for the curves of expanded return, because in statistics, this kind of return is called extended return. I'll explain later in more details. Now, let's read out the outcomes of this picture. From this picture, we can easily find out a couple of points. First points, from the perspective of holding period returns, which is higher, Jingdong is higher. Secondly, the spread between Jingdong and Alibaba is getting bigger and bigger. Third, both companies' holding period return is positive. That means both stocks are worthwhile for investors to invest, to hold it. Fourth point, the trend of both companies' holding period returns are all upward. Let me change another color. Okay. So this is for Amazon. Upward. Both upward. However, the result of this picture, when I was first time looking at this picture, I feel surprised, because in my mind said that Amazon ran its business globally, not only in United States of America, but all over the world. So in terms of the regions of the business scope, Amazon should be better, while Jingdong's business scope is primarily in mainland China, right? So from this perspective, Amazon is better. So why is Amazon's holding period return is lower than that of Jingdong? This question puzzled me for a couple of days. Now, I also expect your explanations, your imaginations, right? So anyway, from the period of holding period return, it is apparently very useful, very valuable. Now I have a questions probably to you. Try to explain why Amazon's holding period return is lower than that of Jingdong. Okay, we may hold these questions until I have a further explanation on the extended return or holding period return. Now, let me explain the holding period return in more details. It is called the holding period return, or expanded return, or sometimes extended returns. Gets lots of names, but the meaning are the same. Okay? Let's have a 10 minutes break first. See you in 10 minutes. After that, we'll explain what is that.